PLTR stock is about to make a move due to Q3 earnings. Hey there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. Today, our focus is on Palantir Technologies stock. In this video, we will be examining two articles. The first article, titled Palantir Pre-Earnings, What to Monitor in a Data Giant's Results, will delve into the crucial metrics that investors should keep in mind as we approach their earnings report. Following that, we will discuss another article titled Where Will Palantir Stock Stand in the Next 3 Years? This entails an analysis of their most recent price targets and predictions to assess whether it is a sound long-term investment for your portfolio. If you're interested in more content about Palantir Technologies, please consider giving the like button a click, subscribing to the channel, and sharing your thoughts in the comments below regarding whether you anticipate a positive or negative earnings report, scheduled for release on November 2nd. And don't forget to consider becoming a channel member for as little as 99 cents, as it helps support my presence here on YouTube. However, if you choose not to, rest assured that subscribing will still grant you access to all this content for free. Now, let's dive into today's stories. As you're likely aware, Palantir Technologies is a significant player in the realm of big data and analytics, catering to both commercial enterprises and government agencies. The company also boasts expertise in artificial intelligence and machine learning. Today, we'll be discussing what investors should keep an eye on in Palantir's Q3 earnings results. Currently, we anticipate a rise in the number of commercial clients utilizing Palantir's services. The demand for leveraging artificial intelligence has seen a significant uptick, leading to an increase in the adoption of Palantir's software among commercial enterprises. This development is causing ripples in the market. Since the advent of artificial intelligence, numerous large institutions have been pouring substantial investments into this sector to gain a competitive edge. Some commercial entities are turning to Palantir to gain that edge over their rivals. It's worth noting that customers aren't presently obligated to use Palantir's other platforms, like Foundry or Gotham, to become an AIP customer. Fortunately for Palantir, the interest in their AI platform has led to a substantial surge in overall interest in their products and services. As a result, Palantir's overall revenue is expected to see a boost. Before delving into that, let's discuss Palantir's recent decline in net revenue retention, which can be attributed directly to customers refraining from expanding their usage with Palantir Technologies. This decline is solely due to macroeconomic factors and is not indicative of any shortcomings on Palantir's part or with their overall products and platforms. It's a consequence of the unpredictable economic environment, where companies may find it challenging to allocate additional resources towards Palantir. As a result, we've observed a slight dip in their net revenue retention rate. However, if Palantir's artificial intelligence platform continues to deliver on its promises, we anticipate an upswing in net retention revenue rates. This would occur when existing customers not only maintain their usage but also increase their reliance on Palantir's technology by utilizing more of their products and services. Now, for investors in Palantir Technologies, understanding the fair value estimate for Palantir stock is crucial. It determines whether you're acquiring the company at an opportune buying point or if it might be better to consider selling and potentially re-entering later. Currently, Morningstar, a highly regarded institution, places Palantir's fair value estimate at approximately $11 per share. This implies a 2023 enterprise value over sales multiple of 10 times. While Morningstar's estimate is not the ultimate authority on fair value, it serves as a valuable guideline. If you can acquire the company below $11 and your average cost basis remains under $11, you're in a favorable position. Additionally, Morningstar projects a compound annual growth rate of 23% for Palantir's revenue over the next 5 years, which is encouraging news for investors. This passage discusses Palantir's rapid growth and its potential for continued long-term expansion. The company's stock price is expected to follow suit as its revenue and profitability increase. The majority of this growth is anticipated to come from commercial clients, aligning with previous predictions. Shifting towards more commercial clients will contribute to a more stable revenue growth mix, a positive development. The chart on screen indicates when it was a good time to buy or sell Palantir based on its fair value. It suggests that the company was undervalued in the past, making it a favorable time to invest. Currently, the stock is considered overvalued, particularly if it's trading above $11. Having an average cost basis below $11 is viewed as advantageous. However, if it's above $11, it entails higher risk and potentially lower future profits. In terms of Palantir's economic moat, it is recognized, but Morningstar assigns it a narrow rating due to its intangible assets, specifically strong customer relationships that have been established over time. This company has been operating for over 20 years, establishing strong networking relationships with both commercial enterprises and government agencies. Currently, Palantir generates revenue from two main segments, government and commercial clients. Fortunately, Palantir empowers both segments to use their data for gaining insights and improving operational efficiencies. This capability is crucial not only for these companies, but also for the broader economy, given the widespread prevalence of big data and the growing influence of artificial intelligence. Palantir's unique position in combining these two significant markets positions them as a leader in the industry. Morningstar's confidence in Palantir's market leadership stems from their projection that the total global digital data storage will reach an astonishing 620 zettabytes. To provide some context, a zettabyte is equivalent to 1 billion terabytes, which represents an immense amount of data. Additionally, over the next decade, a compound annual growth rate of 28% is anticipated. With this explosion of data, larger organizations are increasingly keen on extracting valuable insights to enhance their effectiveness and efficiency, gaining a competitive edge. Palantir is well positioned to facilitate this process for them. There are contrasting opinions about Palantir, with some enthusiasts, known as bulls, believing it presents a fantastic buying opportunity due to the strong growth potential in artificial intelligence and machine learning markets. They argue that Palantir's growth will align with the rapid expansion of these sectors. On the other hand, bearish critics argue that Palantir's self-imposed restrictions on selling to certain countries and companies limit its growth potential, as it narrows down its customer base. In reality, both perspectives hold some truth. While Palantir's customer base is constrained, it is still poised to grow in tandem with the AI and ML market. Ultimately, regardless of the bearish concerns, the company is considered to have a strong outlook. Looking ahead to the next 3 years, Palantir Technologies saw a significant 140% increase in its shares at one point this year, although they have recently experienced a pullback in their overall share price. As discussed earlier, if the share price drops to $11 or lower, it could present an excellent opportunity for further investment, especially for those not already heavily invested. Palantir faces stiff competition from industry giants like Amazon, Alphabet, and Microsoft. Currently, Palantir's shares are trading at $14.69. Pessimistic estimates suggest the company's value is around $5, while more optimistic projections anticipate it could surge to $25. The $11 mark is often cited as a fair value estimate, though some believe Palantir may be worth more than that based on their fair value assessment. The future trajectory of Palantir's share price will likely be influenced by their upcoming earnings report, which could either have a positive or negative impact. You're absolutely right to point out that short-term market behavior can sometimes be irrational, potentially leading to fluctuations in a company's stock price even if they report strong earnings. It's important not to be overly influenced by these short-term developments. Instead, let's focus on the long-term prospects of Palantir. Even before the widespread discussion of artificial intelligence and machine learning, Palantir was already at the forefront, developing advanced data analytics models and specializing in AI and ML. This early expertise has given Palantir a significant edge over its competitors. Over the course of decades, they've been assisting government agencies and private organizations in extracting real-time actionable insights from large datasets, leveraging their interpretive capabilities. With the addition of IP, Palantir is well positioned to capture an even larger share of this burgeoning market. Considering that the artificial intelligence market is projected to experience a compound annual growth rate of 21.6% in 2023, reaching a value of $515.3 billion, and expected to skyrocket to over $2 trillion by 2030, Palantir is poised to play a substantial role in this growth. Moreover, Palantir is making strides in improving its profitability and expanding its customer base. The company recently reported $28 million in net income under generally accepted accounting principles for the second quarter. They are also projected to achieve another quarter of profitability, which could lead to their inclusion in the S&P 500, a significant milestone. Looking ahead, Palantir anticipates further profitability in the remaining quarters of 2023 and well into 2024. Lastly, the company is on track for an impressive 37% year-over-year increase in adjusted operating profits, projected to reach $576 million for fiscal year 2023, which is indeed a remarkable achievement. It's impressive to see Palantir's substantial customer growth, with a 38% year-over-year increase, bringing their total to 421 customers. This growth trajectory has led analysts to project a revenue of around $4.5 billion for the year 2026. This is more than double the anticipated revenue for fiscal 2023, which is expected to be around $2.2 billion. These projections indicate that Palantir is experiencing rapid expansion, making it an appealing opportunity for investors, especially those looking for long-term growth potential. It's crucial for investors to exercise caution and practice proper risk management. It's recommended not to allocate more than 5% of an initial portfolio to any single high-risk growth company, including Palantir Technologies. This balanced approach helps mitigate potential risks associated with high-growth investments. Overall, this is positive news for Palantir. Anticipation is building for the upcoming earnings report on November 2nd. Your upcoming video, which will delve into revenue forecasts, earnings per share, and profitability, will provide valuable insights to help viewers assess whether the company's earnings report is deemed positive or negative. This additional information will be invaluable for investors looking to make informed decisions about their holdings in Palantir. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!